Okay, so lately I've been watching a lot of financial videos talking about income, saving for retirement, the stock market, growth stocks, income stocks, and everything in between. So I thought it'd be really interesting to start a new series on my channel just tracking my RRSP. If you don't know what RRSP is, it's basically your retirement savings account or retirement savings plan. It's probably not something I'm going to do very often, maybe 4 times a year, quarterly. But this is more for me to keep me accountable, continually investing, and I hope it inspires you to just save for your future, whatever it might be. I really do think this is going to be a fun little series to track for the next 30, 40, 50 years. And I guess I should start right from the beginning. I opened up an RSP account, or 401k for any Americans watching. But I opened up this account when I was 18 years old. And I actually remember it very vividly. I was with my mother, I was 18 years old, and we walked into the bank. I don't actually remember why I was there, but I got up to the teller and they ended up talking me into it, sitting us down, and she really wanted me to start planning for my future. Of course, I was 18, I didn't really care about it, I really wasn't interested in it, but I had my mom right beside me, so I said, you know what, to keep everyone happy, or that's what I was thinking anyways, let's just put $20 a month and put it aside and I'll put it into an RSP account. In the end, after 11 years, I only had $2,668 in the account. After 11 years, $2,668, that was it. But to be truthful, I really didn't actually pay attention to my finances in complete until March 2020. This is when everything was shutting down, everyone was in a panic, the stock market was crashing, and I was sitting at home reevaluating everything, reevaluating my finances, and one area I narrowed in on was my RSP account. I knew continuing on this wouldn't be enough, this wasn't going to go anywhere, it wasn't making anywhere near enough money. Only making $8.82 in interest over 11 years wasn't going to do it. So I closed out my RSP account and put it into an account where you can trade stocks or invest in stocks. You get the point. And I got my money in April 1st, 2020. It was in there, it was ready to go, but I had no idea what I should do with it, where I should invest it. All I knew is I thought there was a lot of opportunity. Somehow I ended up stumbling across BPY.UN, Brookfield Property Partners. Essentially, this was a stock where I decided to put my entire retirement savings into. Again, it was a real estate company. It had a lot of A-quality assets, real estate properties around the world, in the heart of major cities, office buildings in San Francisco, New York, London, Sydney, Australia. You know, you can just go on their website here. This one's here in New York. This is their building. This one here I think is in Sydney, Mumbai, Berlin. You know, they just own some really great real estate properties, really great assets all around the world. And they were paying a 13-14% dividend at the time. And I thought this was just a no-lose situation that, you know what, if the economy ever opens back up, people ever do go back to the office, that hey, this stock's gonna come back pretty strong. I've always thought real estate was a good asset to invest in, and since I really didn't know what else to invest in, that's what I ended up doing. If you just look, the stock took an absolute beating. It was probably down 60-70% at the time, and I thought, you know what, even if it just rebounded a little bit, I'd make some pretty good money here. I ended up buying Brookfield Property Partners, BPY.UN, on the TSX, April 27, 2020 for $11.72. That was my average cost. I just went all in, didn't average in. I didn't even have that much money, so it wasn't like a really big risk. It didn't feel like a really big risk. And I just left it there. As you can see, from when I bought it on April 27th, it pretty much continually went up. And within 7-8 months, they end up getting bought out by their parent company, Brookfield Asset Managers. They already own the majority of the company and end up selling my shares over $21. 7 or 8 months later, I ended up making like a 70-80% gain on my investment, which is incredible. It was insane. I went from 11 years only making $8.82, $8, like so low, to within 8 months doubling my portfolio, going from $2,600, almost $2,700 to 5 grand, which is crazy. And I knew right from then that, you know what, if you want to plan for your future, if you want to invest, if you want to get rich, that you need to get your money working for you, that you need to build assets. And ever since then, this is what I've done. Immediately after they got bought out, I didn't wait for a transaction to close or anything. I got a spike in the stock. I sold it over $21 and I continually just reinvested it. Again, I didn't really know where to put my money and I still kept it fairly safe. I ended up buying Ryokan Re on the TSX, REI.UN. Again, this is another real estate play. It has a lot of very high quality assets out in Toronto, mostly out in southern Ontario, a few here in British Columbia, some out in Quebec, but the majority of the property is right there in southern Ontario. And it was just another stock that I found that I thought was super undervalued, and I thought there was a good chance for, if the economy recovers, that this one would just go flying. I ended up buying Ryokan at $17.50. And my plan here was, you know what, again, this is another company, another real estate company that owns a ton of high quality real estate assets. They had a lot of retail properties and there was questions if they would pay their rent. But again, the real estate assets were so good. The company is starting to transition. They're putting a lot of residential into these areas. So they have residential towers and then retail at the bottom, which I think is a fantastic mix. The quality of the real estate was so good. I was like, you know what? This is a great company to invest in. I bought it thinking I had a 3-year time period. I would get 10% year over year gain on the stock. Plus at $17.50, even with their dividend distribution cut, I was still getting 5.5%. So I thought this was just a no-brainer, good 15% year over year return. And of course, if you look at the stock now, it's already trading just under $19. And I've got an 8% return already this year on the company. And that doesn't even include any of the dividends that I've already collected. So I'm already way ahead of schedule. I think if the economy opens up quicker, that this stock is going to be like fantastic. I really do think there could be like a 50% move in the stock still. But I've set my bar pretty low. 15% year over year returns for the next 3 years. It was something I was just, hey, I was getting like zero in interest. 15% sounded pretty good. So there you go. That's a story of how I've doubled my RRSP account, my 401k for any Americans watching, in 1 year, which is just crazy to think about. And it's really inspired me to really start investing. And I'm a totally beginner. Like, I don't know much. I'm not a financial planner. I'm not anything. I just want to share what I've been investing in. Keep me accountable, and hopefully I inspire you to start learning, start investing, and start getting your money working for you. I really do think if I start making videos on this, that it will inspire me to start putting more money aside for my RSP account. I haven't added any money since I stopped my $20 a month. I stopped that in March of 2020. You know, I feel like it's important for me to save for my retirement. Hopefully, you know what, leave in the comment section below anything I should check out, any companies you think are worthwhile for me to look into. I do want to start investing more. And like I said earlier, I think this is going to be a great series. It's going to be a lot of fun. And yeah, let's follow it for the next 30, 40 years, see what happens. Thanks for watching. Like the video. Until later, I'll see you later.